Beautiful. Hello, how's it going, guys? And welcome back to the MentorFX Private Mentorship. What's going on, everybody? This is webinar 165, and I am honored to welcome everybody on this beautiful morning and wish everybody a very happy Sunday before we get started for the actual upcoming week. Few things I want to cover today. I'm going to read over some of the chats in just a second, but before I do, I just want to welcome everybody on. I want to welcome all the returning members. What's up, guys? Very good to see you. I see a ton of names that are very familiar. It's a pleasure seeing all of you. And at the same time, to welcome anybody that's completely new. So welcome aboard if you're new to the team. If you've kind of just joined up, this is kind of your first webinar. What I want to offer to you is that you've made an insanely good choice. You've set on a path that is going to be very rewarding. It has been for many, and given that you stick to the path for yourself, and that you get better and better, and that you actually care about doing this as a skill set rather than something that's more of like a small, tiny hobby where you can pick it up, pick it off, pick it up, pick it off, you're going to see yourself get a lot better over the coming months. So welcome aboard to a lot of you guys as well. All right, I'm just gonna go through some of the chats, just say good morning to everybody. What's up, King, Jamie, Black, Golden, Nameless, Michael, Gilzu, Aid, what's up, guys? Good morning. Onions, yeah, a ton of familiar names. If I don't say your name, I see it, I just didn't say it, okay? That's just how it goes sometimes. What's good, everyone? Loved the course. Yeah, so as you guys know, Portal is continuing to be, actually, I'll do it like this. So as you guys should all know on the MentorFX website, for the most part, where the most updated version of the course is, we've continued to add mastery material into here. At the moment, we're only up to market models and stages and up to 6.6. However, we should be able to get a little bit more out in the next few days and start moving from there. But again, as you show up to these webinars, one of the main focuses in them is to kind of teach in tandem / next to the things that you're kind of learning throughout the course, so you can see exactly what it is you're working towards in your overall trading, all right? And you get to see firsthand how we use the tools and whatnot too. So a lot of the reasons that some of the stuff in here is coming out a little bit slower and I'm taking a little bit of time with it is, one, because I'm taking time with it, but two, because I want to make sure that some of the major parts of the screener are actually complete. So I know a lot of you guys are aware that we removed a few things from here. So stocks have been removed. Not all the futures are present here. Like we basically removed a lot of stuff from here in the meantime, while we, one, make it better, and then two, ingrain all that data after, because all of this data basically floods into the understandings taught here, right? So anyone that has now been through the portal, now again, if you're new, it's perfectly fine. If you don't know what I'm talking about right now, it's okay. You're going to be working through the portal in the coming weeks. But for those of you that have already been and are up to date with the stuff in the portal, one of the main things that we're going over right now is stages, right? Stage 1 and 2, which is, we talk about it every single week, but the simple version of it is price moves in a stage 1, starts into a stage 2, moves into a stage 1, moves into a stage 2. Basically, in a bullish market or a well-delivering bullish market, on average, this is how a market is going to set up its bases or stairs, whatever you want to call them, to move to a higher price. Right, so just through stages. Now, when this occurs, and when we go inside of them to look at like what's actually happening through stages, you start to understand that what's happening is these are creating what we call accumulations or reaccumulations, which is exactly where a lot of the rules that you've learned before come from, in basically putting out the accumulation or reaccumulation readings in the screener, right? Ultimately, without even knowing necessarily, specific structure-based rules or anything like that. If I simply, let me go like this. Okay, and let me go like this. Okay, without anything else added, okay, if I simply looked at this action right here and I said to you guys what a lot of you already know to be true. So if I go to annotate, make this a little bit, yeah, sure, that's fine. So if we look at this here, and I was to draw, let's say, a black base structure as per the portal of a low to a high, to a higher low, to a potential higher high, and then I was to draw potentially inside structure, so maybe something along the lines of this right here, right? So this is breaking down. When this happens, what is this rule called as taught in the portal material at the moment? When price kind of undercuts some kind of inside structure, basically taking out some kind of inside structure to create a larger structure's delivery in a given moment. Yeah, exactly. So this is what we call the anticipation of the higher low, right? Because we basically anticipate a higher low to occur at one of these prior kind of failures of demand or new demand coming in at prior demand. Okay, so that's exactly where it came from. At the same time, what are the underlying, actually, I don't even have to ask that. We can also throw on the understanding of stages onto this, right? So if I was to ask you, your best understanding of stages from an example, from how you were taught in the portal, a lot of you should be able to, very likely, start at some low and go, okay, likely is some kind of stage 1, of course, because then we had a stage 2 come from it, right? And then from here, there's a few ways that you could have drawn this. Some of you might draw just a big stage 2. Some of you might draw the new stage 1 into a stage 2, into a stage 1, into a stage 2, into a stage 1, into a stage 2, into a failure, right? Very, very fine. Now, others of you might have just gone ahead and said, this is like a bigger stage 1, this became that stage 2, this becomes a bigger stage 1, and this becomes a larger stage 2, and then I can expect that later we're going to get a stage 1, right, for me to get a new stage 2. And again, if I was to just go with that understanding for a second, if I actually take a photo of this for all of you just for a moment, if this is kind of the one you went for, let's get rid of the annotations now. Whoops. Annotations, clear it all out. So if that's the one you went for, which would be this one right here, right, and you're now expecting that there's going to be a stage 1, a lot of you might be able to spot where actually, funny enough, my entries or some of the entries that I traded this week came from, right? Again, nothing new, but coming from that exact same understanding where you had kind of these stage 1, stage 2 deliveries, and I entered through the next larger stage 1, which acts as, so this takes us to the next part. Let me hide this all again, which acts as, if I was to redraw this very quickly, a lot of annotation tools, huh? So stage 1 into the stage 2, let's say, or, stage 2, stage 1, stage 2. It doesn't really matter. You can draw it a few ways, right? Into the larger stage 2 made up of smaller stage 1s, 2s, 1s, 2s, etc. Either way, all of this put together, so whether this is viewed as a large stage 1 or viewed as the anticipation of the higher low, where it kind of takes out this potential low, when we're drawing these stage 1s, what is actually happening in a stage 1? Why do we label it a stage 1? Like, what is the occurrence as price flushes out, as price comes down? Yeah, exactly. It's for the purpose of, literally the definition that I provided a lot of you. The definition, wait, let me make sure this is all recording still. Okay, that's cool. The definition that I provided you is that price is ultimately accumulating positions, right? We're getting the transfer exactly of weak to strong hands. We're moving from the flush outs of potential profit takers of the existing bullishness or new dumb money selling in. And overall positions are accumulated, which lead into the potential MBs and the move higher, into the momentum, into little tiny momentum moves significantly higher, and sometimes much larger, but in this case, quicker momentum-based moves. Now, funny enough, you guys are completely correct, right? In this occurrence of, here we go. In this occurrence of us assuming this is accumulation or weak to strong hands, and we can label it as such, that's exactly the principles by which the models are founded on, right? So that's exactly the models by which this right here is founded on. It's literally following this understanding. So even without, let's say, the Mentifex structure indicator, that's, like whatever, however you want to think about it, even without this, if you truly think about what's actually going on, and let me go ahead and do this. Here we are. If you truly think about what's going on, you're having a leg that's being created to the higher end, which might be like a perfect example of 1s into potential 2s into 1s into 2s, right? Like you can get as refined as you want to get, but the point of it is not to get refined. It's to understand what the underlying money is actually doing. So when it starts to break down like this or below a low, it's creating an accumulation. It's creating a reaccumulation, right? That is why when we're bullish on a market, potentially bullish on a market on a given time frame, and price breaks down, it's not ever like a, that's it, it's bearish, right? Or at least not for me. It's always been a understanding of how have the orders that are entering this market, right? And as a result, let me go back to making this a little bit less seen. As a result, no matter how you kind of think about it, that's where these initial ideas are coming from, right? Where you have some kind of leg being created. That leg is then, if you just want to draw it yourself, right? If you draw the lows in like this, right? Or you can make them bigger, right? You can make them to the lows that you think are more prominent, something like this. And then price breaks down. This in itself is becoming a reaccumulation, right? That's exactly where that idea comes from. So I just wanted to start this off by introducing that, because I want to explain that just because there's a calculation that might be going on, just because we have proprietary tools that we're building out and software building out, does not mean you cannot read the actual action of the actual market, right? Because in reality, all we're doing is we're looking for those exact rules, and we're just trying to look at them across a few time frames. Christian says, so the screener isn't based on MB models, it's based on the stage 1, stage 2's anticipatory higher lows. So again, I think you're skipping the point, right? If the screener, so I'm going to ask you a quick question, Christian, before you continue. If the screener is based on MB models, then what does that mean in terms of stage 1's and 2's and anticipatory higher lows? They're the same thing, man. MBs are literally the thing that create stage 1's and 2's, right? They show you the general version of stage 1's and 2's. Stage 1's and 2's condense MBs, right? MBs are the function of the market, is the way that I've always taught and always thought about it, because they're quite literally their own version of supply and demand, nothing more. Comment says, very solid advice. I've made a point to use the indicator a little less over the years. Now use my eyes a lot more. Exactly, right? Because the main point isn't to use the indicator as this thing that's like, oh my God, it's made the perfect bullish push, or it's in a perfect bullish push. Instead, it's to understand that they are forming or giving you some rule set, potential rule set to MBs, right? So what happens is, over time, you will get to a point where maybe there's a screener reading that makes a lot of sense to you to follow, right? And you don't want to sit there for, let's say, cocoa, whatever, and look at every single one of these timeframes yourself and figure out exactly if it's in the perfect thing. Instead, you might look at something like this and say, okay, so this thing's been showing potential bullishness or whatever, right? And once we add other filters, there'll be other filters by which you can actually use to decide if something is worth looking at. You're going to have functionality with like moving averages, functionality with just looking at the change on the day or the week or the month. So you're going to have a lot of functionality here soon, right? Not just MBs, but as one function where, let's say you look at something like this and you go, okay, overall we're in accumulation models. You can go over now, and without having to look at every single time frame, you could look at your main ones. So if you're entering like maybe a 5-minute or a 65-minute or daily or whatever, you can look at your main one and say, okay, you know, this isn't a market condition that I'm not worth, or is not worth looking at for me, and that's it. You've done your work. Otherwise, right, if you're on a lower time frame trader, you don't have to do all that extra work. Instead, you can come over and say, okay, this thing has been putting in potentially like beautiful moves. Let's go to 30-minute. Has been putting in beautiful moves, is in beautiful bullishness, and there's no reason that I can't be following this on a 5-minute. And then on a 5-minute, you might be trading the actual overall rules of either anticipation, creating these mini MBs, followed by the momentum-based entries that are created through that, flush outs, creating new mini MBs that, again, none of these are necessarily have to be traded. I'm just pointing out examples of MBs or further follow-up momentum that can be entered. I'm going to go over my own FICO trade in a second, because it's like one of the only things I've traded, and I guess it worked out, which is nice, or it's working out. Then you get kind of these mini flush outs, which are a little bit harder to trade, but they do create the moves out of there, and the MBs start to move. Then you get another momentum-based one up here, where you probably get either broken even or take a loss on that. Price flush is out to create one of those bigger accumulations. All right, again, if you notice, the anticipation of the higher low rule is kind of being met here without the potential indicator meeting the rule, because it's not about the indicator meeting the rule, it's about understanding what is price actually doing. And then when you pair that with other tools, it becomes a lot easier to understand what the orders in that market are actually doing, right? Then you get your MBs out of there, and then now you just close with this momentum, which, I wouldn't enter because it's market close, but this is moving beautifully. Like, trades through highs, especially if it starts moving up, comes down, stops, and then creates some kind of high plateau. This would be a very nice 5-minute trade. Absolutely nothing wrong with taking a trade like this. And all of a sudden, yeah, if someone said impulse correction impulse, literally, like if you pay attention to what I just drew even, right? Like, this is exactly how moves are created. Roberto says, does the anticipation of a higher low create a reaccumulation in the indicator? Yep, that's what it's doing. That's exactly what I just discussed. That's literally the main purpose of why I started this webinar like that, right? I said you need to understand that these rules that you're learning to view the markets, to think about them in a state of stage 1 and 2, accumulation, reaccumulation. All of that is lending to the creation of those models, right? Which is why I talk about these flushouts creating new accumulation, which is why in the examples that you've been seeing, so like even in the portal material that I've been drawing, right, I taught you to first think about what's happening here as, here we are. I taught you to first start thinking about it as literally accumulation, reaccumulation, right? If you think about the market in a state of, we have a bullish market, nothing more. Let's not think about bearish, let's not think about, stuff that's failing or chopping, because again, markets don't just go up, right? This is not how markets tend to just go, go, go. A lot of markets tend to chop and do nothing and not worth trading, and we stay away from them, or they're bearish, which is also a tradable one, but I've been a lot on the bullish side. If we were just to label a basic market, does everyone understand how prices simply move higher into an accumulation, higher into a reaccumulation, since it's moving higher into a reaccumulation, higher into a reaccumulation or accumulation? Doesn't really matter. You can label it anything. It's A or re-A. The way you can think about it is that the initial one is an accumulation, everything further is reaccumulation until a failure. Does everyone understand how without any concept, without anything added, just the concept of orders are being bought up or accumulated as price moves a little bit lower, does everyone understand how this is basically the movement of a basic trending market, where you accumulate, you move, you reaccumulate, you move, you reaccumulate, you move, you reaccumulate, you move, right? And all we're doing is we're taking the rules that we've now learned and we're condensing this into an easier way to view it without having to just sit there and label everything, because, I don't like labels. Labels are useless. So instead we move to this understanding of stages, right? Stage 1 and 2, stage 1 and 2, stage 1 and 2. And all of a sudden, right, that same accumulation, that initial accumulation, which was this one right here, right? Instead of reaccumulation, instead of accumulation, reaccumulation, 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 we go through 1, 2, 1, 2, 1, 2. Now, based on the kind of person you are, based on the way you're trading, based on even the markets you're looking at, your 1s and 2s may look a little bit different, maybe bigger, maybe smaller, because you may be looking for different things and you're looking across other EVCs as well. Okay, so instead, this is why I introduced to you the understanding of labeling in 1s and 2s, right? Thinking about how is price moving, where is it likely in a 1, is it in a 2, is this a reason to look for a trade or not? Christian says, do you think there's no point of labeling things such as boxes and stuff? So Christian, watch the portal, okay? Very important. I'm literally talking about exactly this right now, and you're asking about it, right? I just said, instead of labeling it, we move to the stage 1 and 2 understanding, okay? So yes, I'm not labeling the accumulation reaccumulations, okay? Now, at the same time, right, we get to see what that looks like in a state of actual price delivery, where you basically get those condensed versions of 1s and 2s and 1s and 2s, which are condensing the action that's actually occurring. So this is why the portal is very important, and I do suggest that everybody checks it out, because you're going to see me explain exactly this, because markets are not perfect. They're not just perfect boxes. If they were, everyone would make a ton of money and do it very easily. If the market was as simple as, hey guys, good morning. Today we're going to be looking at Apple to see if it's a decent trade. We're going to start with the weekly, and very simply, since we are in this perfect, stage 1 right here, and then this stage 2 perfectly happened right here, and now we're in a stage 1. All you want to do is you want to clearly just buy here, put your stop under the low, and then look to see if you can take this to a new high, right? This is theoretically, you can trade in a way like this, but you're going to make very little money, and you're going to be chopped up a lot, right? Because the reality is prices don't move in these perfect stage 1s and 2s. Instead, they move in stage 1s and 2s that are condensed, right? So the entry isn't a good entry up here, right? Up here necessarily, like this. The entry might be good as it starts to actually complete the prior stage 1 because you know it's starting a stage 2. So you look to actually enter this through the underlying action with better stops, with better risk, and you get to capture stage 2s or potential bigger stage 2s just like this. Betty says, shit, I can only stay for 1 month. Well, you will find a way to stay on longer. Or come back another time. There's no problem with that, right? Cancellation's super, super easy. No one's forced to be anywhere they're not supposed to or can't be. So you're in a perfectly fine spot, man. You will find a way to do it for yourself. And do not take a loan. Don't listen to Almond. that is not a good idea. Okay, so yeah, that's literally how it goes. So instead of now thinking in, having to label everything, we think in stage 1s and 2s. And then stage 1s and 2s are going to have their own mini rules about how they tend to deliver, right? And some of these examples include what you guys have seen within the course material so far, the portal specifically, on what I introduce as the concept of flushes, right? So usually stage 1s and 2s are created, whether they're smaller ones or larger ones, are created through mini flush outs, right? Because prices need to correct. Prices need to make their high or low, however you want to call it. And those moments create accumulations, reaccumulations, by which we can actually enter and capture the next stage 2 or the next multiple stage 2s to the top side or the downside based on what we're doing, right? And that's exactly what led to my trade this week on FICO right here. Now, I apologize. There's a lot of labels because I was doing a little bit of explaining to some people in the team within the Discord. But very simply, you see the same thing repeated. Just to give you a little bit of context to what's going on here, the red boxes, okay, are in my mind the exact same price action from when it first happened to what's happening now. That's all I want you to think about when you see the red. So every step that happened here, whether it be the anticipation of the higher low, creation of MBs, the way price moved with the moving averages, how it created the MBs, and then the follow-up entries as price began to show momentum, all of this repeated the exact same way, at least for what I'm used to seeing right here. And it's actually one of the reasons that I personally traded it and am now in this. And again, just keep in mind some of these notes, right? Some of these notes are very easy. This was not taken. I was just tracking it, but I'm just going to get rid of it for now, okay? Actually, no, I'm not, because again, this trade right here, which I hadn't taken, is a replica. This is a replica, for the most part, with the rules of what made this trade good, of what happened to this one that I entered as a continuation for a mini momentum push. There is, in my mind, virtually no difference between these two. And it helps a lot to, one, see myself kind of talk about it, because it should be showing you that, again, as we've taught before, the move itself is what I like to call a snowflake, right? It's repetitive. It happens over and over again. It follows the same fundamentals, but it might look a little bit different, right? The reason this move was good is not because it made this down candle and then this up candle and then this open candle. And this move here is not good because it came down and went like this perfectly and there was an up candle and then a down candle and then an up candle. Right? These are not the things that make these good trades. What makes these good trades, as I love to say, is the context of them. Where are they coming from? What were the EVCs that they've been moving in? How has price moved thus far? How has a momentum-based move started? Where is it coming from? How many times has it now pushed and found itself on the moving averages? Where is it in regards to the larger potential EVC or larger stage 1? Those are the things that make this a good trade, right? And then the fact that because the price is clear and the move is clear, the entry itself becomes a lot better as well, right? And I will go over this trade a little bit more in depth in a second for you guys as well. The new course is fire. I love it. Good. Very good. John says still learning the ICI, very beginning of it, but would that last trade you took be considered an ICI? Honestly, all of them are, because an ICI is basically an MB. But yes, if you want to think just to this simple version of like an ICI, which is like this idea, this is more an ICI, this one right here, than is this one. Because this is more so buying into fractalized MBs within a larger MB. So this one is not, but this one is, right? Because innately, if you want to make it perfect, it's something along the lines of this. Which again, it's not about looking super clear, all right? So it's like this. Which in itself, right, if we were to draw this out, if we were just to move everything so it looks super nice, right? Here you are as an ICI, or an MB buy stop, or a double MB buy stop, as taught in the portal. All right, so you guys should be seeing, especially if you've been through the portal, how all these things kind of come together to create an overall understanding of how markets actually move, right? Okay, so let me read some of the stuff here. I think I saw a few questions. I just want to make sure I'm getting through everything. Hisham says, despite watching all the webinars, I'm still finding gems in the portal material. Let's go, dude. I'm really happy about that. New portal is helpful. Good. Listening from a beach. Let's go, Shies. And that sounds amazing right now, dude. And almonds in a forest. Very good. Very good. Christian says, I feel both make sense. You're just looking at one for smaller structure and one for larger using the golden goose method. Yep, basically, right? Zooming out, understanding where you are, overall structure. Yep. Hello from Vietnam. What's up, Chris? Good to see you, man. Good morning, Ment. How are you doing this Sunday? I'm very good. I get to go to a little concert on Friday. Got to relax on Saturday and getting myself ready for the upcoming week now. So getting right back into it. Marcus has a few rules that he uses behind stages to get a reaccumulation. Looks good, man. So Chris says, in the FICO example, what would need to happen structure-wise to move away from the market? Multiple MBs down, last high or low broken. So it's not even about how does it need to fail for me to move away from it. It could also be as simple as what kind of move is it in? Even if it's delivering, would I move away from actually trading it? And this is a great example right now of a move that I would no longer really trade, right? There may be, of course, still like another mini like momentum-based accumulation push that can happen, and I might actually trade that just based on, you know, where I am in profit and where it opens up. But if it takes me out, I'll probably just sit on my sidelines. But the reality is, okay, so what you need to understand is what your underlying edge is, right? And you can have multiple edges, but as you all know, you should add edge as you actually find edge with one thing, right? So the way I've always thought about this is, let's say a lot of you like the MB entries through larger stage ones. So you wait, you know, you start undergoing maybe a larger stage one, maybe it flushes out, and then you get either this MB entry, which is also one type of entry, where it's kind of under the MAs a little bit, which I haven't taught necessarily yet in the portal, but you know, you get in through this MB right here, that's one type of entry. Or you get in through the double MB, which would be kind of this entry here, like so. That's another type of entry, right? So a lot of you might even find a lot of success just trading like this exact idea right here, and that's all you want to look for. And the thing that I'd focus on at that point is to make sure that you're actually profitable and able to consistently find these moves when they come and trade them well and manage them well before you move on to adding other things, right? Some of you might actually just like the bottom picking MB, where you buy stop an area like this, you get in, you wait, you know, maybe you break even like already here or here, and then that's it. Your move's done, and then it comes down, and then again you buy stop in here, and then you wait, and then on here you break even on that move, and then you get your profit out of that, right? Some of you might trade this number one idea, where you trade kind of that initial MB out of the potential stage one that's being formed. Some of you will find a lot of consistency with this too. With number two, where it's kind of like this double MB or the third MB in a move, right, where it's happening a little bit higher. So for instance, like this would be the example of a trader number one, and number two wouldn't really get a trade, because instead of creating a trade, two would want to trade around here, right? But then that doesn't happen. So this is where a number two kind of trader, or that double MB trader, might not be able to take a trade, and you know, that's part of the game. Now another type of trade, which is actually kind of what this trade right here for me was, and what this one right here would have been if I traded it, is where once you get some kind of longer term base, or the stage one or whatever, accumulation is playing out, and you start putting in action higher, and you're moving, is momentum based, right? Where like the third kind of MB entry based thing is where price pulls back into the 9 or the 10. Yeah, so like a 9/10 doesn't really matter, you know. I've always played around with these. Like you'll see sometimes I have a 9, sometimes I have a 10 on here, but 9/10 EMA or 20 EMA, just kind of comes right into it with momentum because it's already showing momentum. And then through that sideways, it creates a move out of there, or it finds itself going sideways a tiny bit, comes up and creates a beautiful MB from there, right? So this in itself, right there, is like a third type of MB. And all of these lend to independent moments in the, let's call it, in the cycle of a delivery that all have potential edge associated with them, right? And a problem that a lot of people run into is they'll try to get into trading, they'll start learning about trading, and then they'll see me take, let's say, whatever trades that I'm taking or someone else taking, and they'll try to basically trade any one of these, because guess what? It's true that almost any day on any time frame, especially if you look at multiple assets, you'll get some form of one of these trades, right, somewhere. So the thing that we do is we attribute the fact that we've missed the number 1 entry or the 2 entry or the 3 entry, and we start to think that either we can catch the next one or the next number in the potential cycle. And then as we start doing that, we start to take a lot more losses because now we're following things that we're not necessarily used to, but we just, we FOMO into the move. So like that's almost like the advanced FOMO, where you move away from randomly FOMOing because someone else just took a trade. And now, instead of FOMOing just randomly, where you're buying shit because, fuck, I really want to be in it, now you're FOMOing into the fact that you understand there are multiple opportunities for an actual entry, which is true. There are multiple ways to get into a potential move or into a move that's delivering, however it might be delivering. But it just might be the case that you shouldn't be executing it because your edge is not there yet, right? And you need to focus on, let's say, one edge. So to Chris's question, where he asked, what would need to happen structure-wise for me not to trade it? It's not that something necessarily needs to happen structure-wise for me not to trade it. It's more so that if the 1, 2, or 3, let's say, edge scenarios that I'm looking for are not occurring, that's simply a market that there's nothing for me to do, whether it's delivering beautifully or not, right? So for FICO's example, in your case, as it's like one of the only things that's actually delivering for me that I'm in, this is a moment where there is nothing for me to do, right? Whether it now flushes out to down here, whether it goes up to 2,000 by tomorrow, which it won't, but if it does, I have the exact same approach, mentality and execution-wise, whether it's here or here, because it's not about necessarily the stage happening in a certain way or the moving average moving a certain way. It's about, are we within one of these edge scenarios that I make money, right? And if the answer is no, that's all there is to it. Now there's, I wait till we are. So I'm either in a trade to which I can manage the trade until we're in a new stage where I can trade, right? Or I'm not in a trade, I've missed a potential move, and I have to be on the sideline waiting for that move to happen now, right? So that's the way I'd prefer that we think about this instead, okay? So let me know if that makes sense to you, Chris, right? Because I'm not sitting there thinking, well, now if the structurally move below this higher low here or this one right here, I'm out of this move and I don't want to even think about it. It's more so, this is a market that's delivering. It's been delivering, let's say, or whatever, right? It's creating the moves that I tend to look for in my edge scenarios, right? These are where I have edge. And if it's creating a setup within those edge scenarios, then I'm happy to trade it, right? So I'm gonna try to find Chris's reply. I don't know if he's still here, but later on, see where we were. So that was for some of the FICO example, which we'll go over a little bit later. But yeah, as you're looking at this, just pay attention to the fact that in my eyes, what's happened in this red right here on the left is exactly what's happened in this red on the right, and that's one of the reasons that I actually ended up trading it. Luke says, I'm here the second month, and I'm reading a lot of ICI in the chats. Is this somehow connected to stage 1 and 2s? It's basically just MB-based entries. It's what you're learning in the portal, so you're perfectly fine. Roberto says, does the anticipation of a higher low create a reaccumulation? Oh, you already asked that? Okay, we saw that. Should you wait for anticipated higher low, or do you now use it after it makes a flush and takes MBs, even anticipated higher low not forming yet? Mohammed, I'm not sure what you mean by that, brother. Hey, at MentifX, how would you tell me to approach the course? It is not my first time in the course. I bought it a few months back and learned the old course. So in which order should I watch the new course? Webinars are your staple and extremely important. The portal is phenomenal and very helpful. If you keep an eye on the portal and focus on what's there, you will be in a really good spot. And if you show up to these, which it seems like you're doing, you'll also be in a very good spot. Remy says, will you go or could you go during this webinar / later on? What are all the criteria you use on the validation timeframe that are needed before you go on the entry timeframe to look for an entry? Very much the exact same stuff that you see for an entry, but simplified a little bit further. That's really it. You're looking for the fractal stage 1s and 2s of a validation or higher time frame. And today, as I go over even my FICO trade, that'll be covered. And hopefully I can get more out to you in the portal material on EVC to the next stage, which is validation, right? But to put it very simply, if you pay attention to some of the trades that I've been watching or been looking at, even on this FICO thing, you should see the remnants of a similar thing. You have some kind of proof of momentum. On the validation, price moves into some kind of stage 1. In this case, the stage 1s are met with price moving along the 10, 20, or 50, usually the 10 and 20, and then moves into a new move, right? Goes sideways into a stage 1, kind of finds itself within the 10 to 20, right around here. And again, lower time frame entries from there in anticipation of a move higher. Again, the very, very similar things to what you're used to on the entry, just kind of zoomed out a little bit is what's going on there. But, you know, a big focus of that is going to be in the portal material when we get to it. And I'll try to go over some of it on my FICO trade from this week. You think it's no point of late? Oh, we went over that. Remy says, question number 2. So it's closer to the first one. Do you require the validation time frame to be in the same accumulation or distribution model than the context time frame? For example, validation accumulation, context accumulation. No. Sadiq says, how exactly from a high level does the screener determine the state of the market? Is it current bullish / bearish MB count? Well, as I like to say, it's proprietary, but it's based on the exact rules that I am teaching you, which is that overall moves are created through moves higher and then moves lower. Multiple of these moves put together, and they're let's say how far they move, how far they correct, create what I call accumulation reaccumulation models. And you can get as deep as you want with them, or you can keep them relatively simple, but that's how the screeners determine them, and that is doing that across multiple time frames. That's it. Christian says, when I meant labeling, I meant S&D zone boxes, and I've been showing up to recent last time webinars, but from the break I took, the ones I'm catching up from is from webinar 90. You think I should just catch up from the 100 plus is really good. Give me 3 months and I will come back with the Bugatti. Good luck, man. Man, can you give us like a scheme of what we should watch after the mastery? Yep, webinars, make sure you show up to them. You can also go through some of the old archived course material if you really want to. But right now, my main focus is putting out the best portal-based material because the mastery is not completed yet, of course. Do we need a flush at the end of stage 1? Do we need a flush at the end of stage 1? Nope. Not at all. If you watch the portal material, again, so like, there is zero reason, especially if you've been here for a while, that you shouldn't have been through most of the portal, right? There's just zero reason. And that question to me just seems like, you know, you haven't seen the portal material yet. Because the only time I've brought up flushes thus far within the portal material, over and over again, is after stage 2s. After stage 2s occur, the next stage 1, which is what happens after stage 2, is going to have a flush, right? Stage 2 happens, it flushes out to accumulate. That is the starting principles of a stage 1. And you should know that based on the portal material. So please, please, please go through the portal. What roles do SMAs and EMAs play in your entryment? What do you mean? They play they play pretty big roles. Right? They show me if money's coming in or not. They show me if the move is still there. They show me if price is going to pull back and create a momentum-based move, where it's likely going to happen. They show us accumulations, basically, or fractal versions of accumulations. Would you consider taking a position on the action before the marked not take a trade, or is that too early? Yeah, but it's just harder. Like, you could have entered through this MB here or here. I probably would have gotten broken even on either one of those that I would have taken. Well, this one would have been fine, but this one gapped up. Yes, of course, you can take entries in here too. I just didn't mark any of those. But yes, based on the type of entries you're looking for, these are perfectly fine. Perfectly fine. Well, yeah, I guess if you draw it like that, so yeah, Chris, if you draw it like that, that's technically an ICI. Yeah. Right, but I wasn't thinking of this as an ICI when I took it, right? This is just kind of an FMB, like price moves higher with momentum, pulls back beautifully, starts putting in tiny candles, and then this buy stop is almost like a double MB formation. But you're correct, yes, it's like an ICI as well, based on how you want to view it, because this is happening on some time frame, right here. So you're completely correct about that. Yeah, I mean, this is fine. Any of these entries, those look, they follow these rules right here as well. Very similar, right? You have momentum, price comes down, and then you have these setups in here. Yep, for sure. Those are fine as well. Perfectly good entries. Christian says, do you think your 1 second double MB system would work better with stage 1s and stage 2s? Again, Christian, I think you're missing the point that I've been trying to make with the fact that stage 1s and 2s are literally shaped by those MBs, right? I ask this because that's the closest to my current system, because I use SMDs and etc. I don't like using 1 second, I use 1 minute, but my mind is still connected to old course and etc. So I'm wondering about that. I'm more inclined to watch section 4. My system video than the new members portal, but that's because it deals with everything I'm familiar with. Listen, you can follow that stuff if you want to follow, right? Like, I've traded that stuff, I've made money with that stuff. I just upgraded over time because I found ways to be involved more often, and I found things that make more sense to me in regards to actually trading. You can go any way you want, right? I continue saying that the portal is the stuff that I'm mainly focused on right now, and it's what I'm doing. And I've spoken again over the last 2 webinars over what I would do if I had to go back. If I had to go back, I would focus on the stuff I'm doing now. There's no reason that I would go back to doing the stuff that I'm not doing now, right? So, yeah. And again, I think you're continuing to conflate that stage 1s and 2s are different from like MBs or double MBs. They're not. They're shaped by them. They're condensed versions of them. So, yeah. Really hard for me is to identify the end of stage 1, still working on it. Yeah, makes a lot of sense. It's not always easy. Can you talk a bit more about identifying the start of a true trend? Sometimes I see fractal stage 1s and 2s on my context time frame, even within hindsight choppy action. How would you approach a situation like this? Fractal 1s and 2s on my context time frame. So I don't know what time frame we're talking about here or what we're actually on. But again, like, I'm not thinking in just C, okay? I'm thinking in E, B, C. Okay? I want to know what my V is doing. I want to see if it's putting in momentum, or if it's moving away from averages, or if it's going into and creating stage 2s and 1s. I want to know what my E is doing. I do not think, John, again, I think from last week it was the same thing, right? I do not think in one time frame or what the one time frame is doing at all. Okay? That's one of like the main things I keep telling you. How do I identify the start of a true trend? Partly with the things that you've thus far learned through the material in the portal, right? Just using this, you should understand that the start of a true trend or whatever starts with larger 1s and 2s, right? Moving higher, creating accumulations or reaccumulations with flush outs that are creating new MBs and new moves higher. That's really it. At the moment, that's what you have based on, based on the entry time frame. So that's where you want to start. right? Because those are the things that are creating accumulations and the start of accumulations and moves continuing from there. So that's the starting point right now. But I would stop trying to focus on one time frame, like a context time frame, and wondering how do you get better at identifying when it's actually going to make a move, because that's not what a context time frame does. Burren says, hey Anton, I completed the new course. Now I continue with the webinars. Before the new course, I worked through section 1 to 3, wiring the mind. So after all the webinars, now I'm at webinar 116, I would start with building my own system and start with backtesting. Is this a good plan? Yeah, that sounds great, man. I love the fractal double MB buy stop. What, like this one right here? Yes. Yeah, I mean, I'm not even thinking about this as double MB. I was just looking at the candles themselves. But yeah, I mean, this turned out to be a perfect double MB if you're looking at 1, 2, right? And again, like some, it would be even arguable that, you know, a better entry might have even been up here, because these are much faster based ones, right? Where you're entering into the momentum. So that's why you can see like my stop for this trade is already up here now. I'm just looking to get out of it, right? Because I know this is likely to now start a new flush into proper stage 1 into 2, right? Or flush, whatever, into delivery, whatever it wants to do. And hopefully, you know, I can survive that move, given that it doesn't take me out on the validation timeframes move. Roberto posted some photos. Lol, what was the meme when I just found out about stage 1 and 2? That's why I'm trying to stay with my F double MBs. I don't know what that said. All right, man. I don't know exactly what we're looking at there, but I guess you just tested a few trades or whatever, which is a good start, I guess. Oh wait, that was Christian that said that. And Roberto just posted 3 pictures and then said, I wanted to ask you, I have a lot of this type of losses where price just wicks me in. Any advice? These are not really good examples nonetheless. Also, without mixing the questions, how can I make sure of not entering early after the reaccumulation without the price confirming there's money behind? The last one might be an example. Johannes answers you and says, some of those are too late. Look at the EMAs too far away, and the last is hoping. Yeah. You have a lot of these type of losses. So again, like it's very hard for me just to look at like 3 photos of entries and go, okay, you know, here's the exact issues. That's not really how the markets function or work at all. It'll happen, right? If it's the case, as you're saying right now, like I'm gonna go some more with the question rather than the images, because I don't know exactly what we're working with here. But you say you have a lot of losses where price just wicks you in. Okay? So in that case, if all your losses or most of your losses are continuing to wick you in and then go back down, then you can wait for a candle close. Right? If you want to do that, which will mean you'll be late to a lot of trades, or you might not even be able to take the trade. But at least you'll fix that issue at the moment. Right? It's part of the market that you're going to get in sometimes and price is going to take you out. There's been countless times that I've shared and shown entries that I've taken that have just taken me out like instantly from entry. I could probably even find them, honestly. Hold on. It's a normal thing. This is what trading is. Trading is not I get in and then price does start going in my direction and everything's amazing and then I get to manage and everything's great, or I get in and then I'm correct, but it's okay that I was wrong after because I was correct first. No, there's going to be times where you get in and you get taken out. That's trading for you, dude. Like you cannot think that that's not going to happen. Where do I have some of these? I don't know. I don't have all the images in here. That's really bad of me. I should have had more images. I don't know. I don't even know what that was. That train. No, this one was not even instant. It's pretty good. Yeah, dude, I mean, you have to get used to the fact that you're going to get wicked in and then taken out. I mean, that's part of the game for you, okay? It's very important that you realize that's part of the game. John says, is trade type 1 and type 2 covered in the mastery course? No, not at the moment. But yes, type 1's already being covered. That's the MB entries. I don't recall seeing, maybe it's in more recently uploaded. No, the labels that I had on these were because I was explaining something to someone in the team within the trade talks. I'm not exactly sure where it was. I think I saved some of it. Let me see if I can find it. Oh, this is something I did want to touch on, but that doesn't go hand in hand with that. No, it's just understanding that just because you have an MB entry, first of all, does everyone understand how an MB entry, buy, let's say stop here or whatever, how based on where it's happening, how it's happening, the size of it happening, make the MB itself different in each individual moment? Does everyone understand that to start with? Right? Okay, cool. So that's step one of understanding this, where an MB and an entry through an MB, let's say, is not the same thing just because it's an MB. Just because I took this MB and you took this MB does not mean that it's the same MB whatsoever, or that it meets the rules behind an MB. Okay, that's number one. If I then asked you like a similar thing where I said, you know, is the buy stop of this MB right here the same as the buy stop of this MB right here? This one and this one. This one, here, I'll do this. These two red ones, are these the same thing? No, they come from very different moments in price. This one is a momentum-based MB after, again, if you want to go through the rules, after a larger stage one, then price, if you want to count, went through an MB, 2, 3, 4-ish, 5-ish, 6-ish, around 7. 7 prior kind of MB based on the momentum, and then you took this one for maybe a little move. This one here happens after stage one, starts a move, and then is almost the first one. There's very big drastic differences between these two. And as a result, let's say you're actually a trader that is okay with taking both of these. Well, these are two different types of trades. So for you as a trader, this is, let's call it trade type A. This is called trade type B. And you might have different approaches to how you're going to manage or trade them. That's exactly what trade type 1 / trade type 2 is working at as I write this in. It's not necessarily like this is the type of entry that gets you this. No. They're just differences in MBs and where they're occurring. So the type 1 entry that I'm usually taking, or where I might get in through, let's say, a larger term stage 1 and I enter into the MB, is a very different type of entry than the one where price has proven momentum. I get in and then I aggressively, like Anthony said, I aggressively trail the profits, or I aggressively look to get out because I understand these moves are likely to go and then fail back down instantly. Because again, this is a very different context to what's happening here. These are two very different types of trades. And as a result, for me, I label them as type 1, type 2. And then Sadiq asks, what's the difference between trade type 1 and trade type 2? Did you not just listen to me, man? Okay, in my example here, trade type 1 is where price has gone into a larger term sideways, stage 1, and is coming out of that stage 1 through the MBs. That's my type 1 in this exact scenario. Type 2 is where price has made, again, I'm repeating myself for you right now because you just rewrote the question after I discussed it a second ago. Price has made momentum push out of that stage 1, and is now within fractals of shorter term 1s and 2s. Literally, this is a very different context than the trade that was taken here, or trade that might have been taken like here or whatever. So I understand that the management of said trade type 2 is going to be different because the type of entries are different. If you're someone that enters quicker MBs every single time and you enter this one or this one, these are still very different. One is happening very late in a cycle of price delivering. One is happening earlier in a cycle of potentially delivering. But then you could also argue that if you took a trade, let me ask you guys a question. If I took a trade here, like this. If I took a trade in here, what is this one closer related to, type B or type A? So a lot of people are saying type B, but whoever's saying type B is completely wrong. This trade up here is a trade type A, because A has proven to be a setup that happens after momentum's already present multiple times and then creates an MB. Similarly, after momentum is already present multiple times and you enter the MB, that's a type A. Okay? So you can see what the biggest problem with, getting used to, let's say, buying MBs or whatever it might be, especially if you're starting out, because you're not identifying that there are differences between this entry and this entry. And then if you can't identify that there's differences between these two entries, you're never going to understand how this might be similar or related to this and not this at all. I did not understand how that was type A. Can someone please help? Well, think about the characteristics that made this one a type A. Price came out of an overall accumulation stage 1, started moving higher, had multiple momentums. Momentum, here, let's even count them. MB1, momentum MB2, momentum MB3, momentum MB4, momentum MB5, momentum MB6, and then you enter the MB after 6 MBs, no correction, no flush outs, in anticipation of a move. That's what we could call a type A. So if we go to the right, and now we think again, price goes through a stage 1. That's what this did. Then it starts a move. And then it creates this guy originally. MB1. Well, if you enter here, is that trade the same as this one up here? Not even close. Okay, they're extremely different types in regards to what the context of the trade is. But okay, you have 1. Then you have price go a little bit higher. And you have 2. Then you have price go higher. And you have, you could argue, 3. Then price goes higher and you could argue you have 4. Price goes higher and you could argue you have 5. Price goes higher and you could argue you have 6. Price goes higher and you have around 7 or 8. So if I make that green now, those trade types, or if I ask you the question, is this MB here more related to a trade type B that we saw here, or trade type A that we saw here? Okay. That's because in this case, the fundamentals, right, or the context that created this A trade here are much more in line with the fundamentals that created this trade here. These MBs are much more correlated to each other than these MBs are, right? So, Akash, do you understand the difference between these? Now, again, that does not mean that trade type... Oh, wait, actually, I'll ask you guys. Does that mean that trade type A is innately a trade that you should not take? Not at all. And I want to actually remind you guys that a lot of traders, okay, if it's lower time frame, it's fine for 1 minute. No, you're completely wrong, Christian. I don't care what time frame you're on. I want to remind you guys that there are some traders that manage maybe $100 million, okay? And their trades are literally only the ones that look like this. They say, I want to find something that's already delivering. I want to find something that's already proven to move off of the 10 and 20 or is moving higher and completely putting in bullish, bullish, bullish. And then I want to enter the MB. And I'm more than happy with taking a 0.5R or 1R TP, and that's it. Something like that, right? And they manage much quicker. And their trades look something along the lines of this. And then as they go, they might move to break even, whatever it might be. But this is the kind of trades they look for. They're more than happy with this because even on 100 mil, this might be a few, 5 mil, 1 mil in earning, and they're happy with it, okay? There's nothing wrong with this whatsoever. It's just that the problem arises when you get a misunderstanding of what is creating this MB and what's creating this MB. So if you're approaching this MB with the same rules that you've approached these MBs, does everyone understand how that presents a very huge issue? And funny enough, we're seeing firsthand, even in this webinar today, that despite the fact that, it's kind of drawn in front of you, there were still people that were like, no, this one here, it's definitely a type B. Or, no, I don't understand how it's a type A. It's definitely a type B. It's very clean. Okay, but, you know, look at where it's coming from. Look at the difference in where this was happening and where this is happening. And despite that, a lot of people still pointed to this and said, yeah, that's a type B. And again, this is not to shun the people that said it was a type B or to say, or whatever. It's to show you that if you're not spotting these mini mistakes or these mini differences when, you know, I'm doing it in front of you, what are you missing when you're doing it for yourself, right? What kind of trades are you overlapping when you shouldn't be, right? Are you starting to consider, well, let me do it this way. If, okay, if this is a type B, right here, I'll do it this way. Let's do it like this. Okay, so if this trade right here is a type B, let's just call it type B for a second. Right here, okay, after this kind of move, what would this trade here be considered? Yeah, so almond is the only one that got it right. It would be a completely different one to start with, because this meets none of the rules of A or B whatsoever. At all. So anyone that said B is again making the same mistake, where if you're trading this right here, thinking it's similar to this right here, your results are going to reflect that. AKA, you're going to be doing a lot worse. Because if you trade this the same way you would trade this, it means you're trading a lot of more choppy action without you even knowing. Because again, what are the rules that created this MB to be clear? A move has happened. It's went through larger stage 1, and then it's given a setup. Where's the move? Where's the flush out? Where's the setup that led to this being a type B? There isn't. Right? All you guys saw was, hey, it made an MB, and then it made a big move. Therefore, it must be a good trade. So it looks like B to me. But now you're trading something that is in no way reciprocal or comparable to the thing that actually made money. So hopefully, as you're like kind of witnessing this, you're seeing for yourself even where a lot of you might be going wrong with your own testing or with your own trading, right? Where if you're really considering this right here the same as this right here, then of course your results are going to start to become a little bit more sporadic, right? When you're not in a good market, because even in a bad market, you're looking at this going, that's a good trade. You're looking at this going, that's a type B. You're looking at this going, that's a type B. You're looking at this going, that's a type B. You're looking at this going, that's a type B. Type B, type B, type B, type B, etc. Right? But there's a very, very big difference in this trade or any of these trades than this trade right here. Okay? Does everybody understand, one, that the types are not like the perfect types that you must learn? It's more so the types of edge that you have in your trading, just like I've spoken about before with, you know, these would be type 1 entries, type 2 entries, type 3 entries, for instance. This could be a type 1, a type 2. This could be trade type A. This could be trade type B. And then Ionut says, okay, how should we manage each type? Well, what question do you think I'm going to ask you? I mean, Maki got the answer, but yeah, you need to test it. You need to see it. On average, what I can tell you is that if you're the type of trader that enters trade type A, based on this, you should be managing break-evens close to instantly, and you should be taking much quicker profits into strength. If you're a trader that trades trade type Bs, you should be a trader that maybe gives the trade a little bit of space, and then allows the entry to hopefully make a little bit of a run. Right? This is how management is created. In my case, if I'm the trader that trades a type 3, I know my break-evens have to be very quick, and I know my profits and my trails need to be fast. So, when I entered my own type 3 base trade, where I entered through the mini setup here, where do you think I went break-even on this thing? Right here. Right after this high. Right after this candle took that high. Straight up, right there. Because I know the likelihood now is that prices are likely gonna flush out to new stage 1s and then create maybe a larger move later. I understand this trade has a very different context to this trade right here. Very different. I understand the potential of a run is very different as well. So as a result, on this day, I literally followed this thing. Stop went here, I was following. Stop kind of went here. Well, again, mental stop went here. Then after this strength, and as the market was about to close, I took a partial. Because again, I'm aware this can probably open up tomorrow down here or here and just gap down. And who knows, maybe it opens up and does this. And then this, and then pauses, and then I'll get out of this trade here or here. Because I know this trade needs to be a lot quicker based. Because I know this kind of move does not create moves that survive accumulations. So being aware of that, of course, as a different type of entry based on this one here, I'm going to cut it off as the faster I can, basically. I want to cut it off as quickly as I can while giving it the chance, right? I'm still giving it a little chance, but yeah. Valid demand, so break even. Yeah. So that's how you manage each type. You manage each type by actually following what those types lead to, right? And again, back to this original thing, you know, if this is the type of trade you're trading, you have to be breaking even close to instantly, right? Like if I'm trading this entry as a type A right here, actually I'll show you this one because this one didn't have a good, like this one gapped up, but this one, if I'm trading this entry as a type A, okay, I'm likely entering it. I would have preferred to enter this kind of thing probably around here-ish if it could pause, but it gapped up. So you wait, and then maybe you enter through this high. The reality of this trade here is if I'm entering this right here as a trade, okay? If I'm entering this as a trade, stop here or here, okay? Doesn't really matter where the stop is because, again, I'm just going over the management of understanding where we are in this move. The reality is after this candle pretty much comes down and starts moving higher, as this is literally a candle that looks like even up here, it's not even taken out this high yet. I'm already moving my risk to break even on this because I'm aware these moves do not result in, these moves result in continuation of momentum or instant failure, right? So then this might be, you might be waiting, or no, I'd be waiting for a big candle to take profit, something like that, to take some profit, and it never happens. This ends up being a, where is it? A +0 -0 scenario, whatever you want to call it. +0 -0 break even, okay? That's what this trades end up, that's what this exact trade would end up being for me. Now for a lot of traders, this would end up being a -1. But the reality is there is zero reason this should be a -1. Zero. Based on where you are taking this trade, based on the context of this trade, right? That is why it's so important, well, that's why I literally teach you guys to focus on what kind of entries are you actually taking? What are the contexts that lead to them? And then what management are you actually using, right? Because the reality of movers is that, well, from at least my own testing of the trades that I'm usually taking, they don't come back if they want to go. They just don't. Or they'll give me a better entry later anyway, right? Yeah, like, even on this trade, as this candle right here was being built, it would have been honestly fine for me to have moved to break even when it looked like this. So just to make this understandable to you guys, on this candle, so I entered through this high right here. I bought on this day as it opened up, okay? It would be perfectly fine if on the next candle, as it put in a low, right, as it did, I think it put in a low, and then as the candle was literally here, right, maybe not even beyond this high, just here, as an up candle, to move my overall risk to break even. Because the reality is it should not come back, and if it does, let's say it does come back, even as a wick, can anyone see what it's just done if this is exactly what happened? What has just happened at that moment? Let's say I get taken out at break even. Yep. There's already a setup, and the setup is the same. So I have no reason to have a -1 risk on this when I can enter here, and if the momentum's gonna come in, it's gonna come in, and I can make money, or the momentum's gonna come in and then take me out again at break even, and then fall off and become a larger term stage 1. So again, if you don't understand where you are in, let's say, a cycle of price movement, then you're gonna take a lot of losses in moments like these. Because again, you're entering later into the move, which is fine. There's nothing wrong with that. You can make a lot of money entering later into the move, of course. But when you enter later into the move, you need to understand you're late to the move, which means you need to manage your risk quickly. And you need to take profits quickly when they actually make profits. You can't let a profit candle come in and go, I'll wait. No, you take some off and you let the next one come in and make you some more money, or you let it start to fail and go into normal accumulation again. Because these moments, right, present those kind of opportunities. So again, you don't need to have candle closes or any of this. You can, it's perfectly fine, but you don't need to, right? As this candle creates a low and starts moving up, at this point, or even if you waited just for this high, at this point, if this candle's still being created, still live, this candle, there's no reason to come back here. There's just no reason. That's when I manage my risk. If it wants to come down, it'll make a better setup. And then if that setup holds and holds, it might be a perfect setup there. And if it doesn't, then it'll fail down anyway. So this should change your perspective of break-evens. Now, this brings me to a beautiful thing that has happened that we need to cover for 1 second because it was just absolutely beautiful. And that's about someone that took a little bit too many drugs, okay? No, okay, not actually, he did not take any drugs, but he wrote something that almost blew up my brain because I was like, there's no way he's being real. And he said, I know losses and break-evens are good, but this feels like a lot to have in a row towards the beginning. Basically, when would be a time where I should start to think about changing things up? So here's a member, right? Again, I really want you to understand like how poor education and how bad education is out there in just the general world. So here's someone who's a member who's taking losses and break-evens, posted his actual RR gains and stuff, and asked me, when should I change it up because this feels like a lot? Let me now show you. -1, -2, -3, +4 is about +1, 0, +7, 8, 9, 10, 14, 15. He's up about 16% in less than 20 days. He's up 16% in 20 days, and he's sitting here bewildered by the fact that he took losses and break-evens. This broke me. This broke me as a human being. I fell down for about 3 hours last night, and my wife found me. She's like, are you okay? Are you okay? This broke me, okay? I could not believe what I heard. Now again, this is by no means to attack this guy, because this is insanely good. This is so good, dude. Right? And if you had a system like this, you're gonna be taking so many break-evens. You're literally, like, if I take 700 trades in a year, I'm going to assume that about, I don't know, 300 of them, 250 of them are break-evens. I'm assuming that instantly, right? Maybe I'll assume like there's 100 wins, or let's say 150 wins, and then like, what's that? 1, 2, 3, 4, 5, 6, 7. 300 losses, something like that, right? 300, 200 losses, something like that. 300, whatever, it doesn't matter. My point is, right, I'm assuming instantly that this is kind of what it's going to look like, okay? And then to hear this, to read this, I almost died, because I was looking at this and I was like, oh, this is like the max RR it ran. And I was doing math. I was like, if he just took 3 RR as his fixed TP, he would have made money. And then I realized it's not even a fixed TP, or he's not even looking at the max RR. He's just looking at the RR that he secured based on his management rules, which amounted to 16% gain in less than 20 days at 1% risk. So that means that on average, he's making 100% a year minimum. So, you know, like, this was crazy to me. And I think it's a beautiful representation of how shit the education out there is. Because this member truly looks at this and thinks, there's something I need to fix. There's something wrong with this, right? So this is also a member who might, if I didn't speak to him, if I don't talk to him, if I don't show him this is also a member who starts testing a system like this, moves to break even on this candle, you know, maybe makes some money. Cool, he made some money. In the future ends up taking a trade like, here we go. Ends up taking a trade like this one. Breaks even on maybe even this candle. Takes a break even. Okay, right here. Takes a break even on that wick. Maybe takes like 6 of these trades and goes, shit, you know, I don't know about this system. So this is a member who without the proper understanding of normal management will literally throw away a potentially multi-million-dollar skill or edge, because like the online space has taught him to think in the fact that every day he's showing up, he should be taking like these nice wins or these nice sweeps to liquidity or to whatever the fuck people are doing nowadays, right? If he doesn't get that, then he's clearly not doing something right. And that's heartbreaking, right? That's crazy to think about. You know, that's a client who will literally, you know, take a long here, move to break even, make money, take a long here, move to break even, make money, take a long here, get broken even, take a long here, get broken even, take a long here, get broken even, take a long here, maybe make some money, take a long here, right, or here or whatever, get broken even twice, and then go, listen, you know, I've taken like 9 break evens. There's like, this is bad. Or like a loss. Maybe he takes a loss here. This is bad. You know, takes this trade, another break even. This is so terrible. It's like, what is going on, right? You have a complete misunderstanding of what actually makes you money in this game, right? So, you know, I told him he must be cracked out. You know, this is crazy. This is crazy. And I think he then said it makes a lot of sense. It was hard for me to see how beneficial it could be over time, but now it makes sense to him. Okay, cool. So now he's fine. But, you know, the thing that I'm worried about, that I'm very worried about, is that there's a lot of people who are actually good traders. A lot of you might actually be very good traders, but you haven't even given yourself the chance to see your own break-evens and losses make up for overall gains on the account. You've seen these break-evens losses, you're like, dude, there's no way this is consistent. I can't be showing up taking losses and break-evens every day, or break-evens every day, and have good management. I need to find something that's going to make me money. Like, okay, if you really think about it, what are most people looking for? What is the sales pitch? The sales pitch people want to hear as traders is, I want to show up for an hour max. I want to open the chart. I want to see a pattern based on the things that I've learned, take that pattern, have the move go in my direction for a minimum of 3 RR every single day. And if for 1 hour it doesn't happen, or God forbid, I have to sit there for 8 hours and do nothing, I don't want your fucking course, right? You need to understand that most of the sales pitch and the approach in trading is that. So a lot of it is focused on that. And you forget to think about break-evens are good. Sitting on your ass is good. Waiting for your moves and your trades is good. Looking at multiple assets is good. Understanding when it's time to get involved is good, right? Everyone forgets that and throws it out the window and then looks for that final sales pitch of do this, an hour minimum, you find the trade, you get the trade, you make money, repeat it the next day and do it over and over again. It's like, that's not what trading is. It's never been that, right? It's never that. And this actually led me to, okay, I'm going to take out my phone, guys. I'm not taking out my phone to ignore anyone. Okay, I wrote down a note last night. I was having a dream. And I want to ask everybody a question, okay? I want to ask everybody a very important question. Here it goes. Would you rather, okay? Now, I'm not telling you there's a right or wrong answer, so think about it. Would you rather be able to consistently make 20 to 50% on a 6 mil account, okay? Or would you rather consistently be able to make 200% on a 600K account, okay? In the same amount of time. Which skill set would you rather want as a skill set? Would you rather want to consistently make in the same amount of time 20 to 50% on 6 mil or 200% on a 600K? All right, cool. So we got a lot of random answers. I love it. We have a lot of A's. We have a lot of B's. I love it. So let's do it. All right, everyone relax now. So 600K consistently though, only on a 600K. Remember, it's not on a 6 mil. It's on a 600K. It's not the same. 200%. So we'll take 600K. We'll get it to 1%. And then 1%, 200%. So you make 1.2 mil. So you can consistently make 1.2 mil. And then after 1.2 mil, you can't do more because you can't consistently make 200% on a 1.2 mil, let's say. Because again, you can only do this on a 600K account. It's framed in a very particular way. Now for A, 20% on 6 mil is 1.2 mil. But I said up to 50% because again, you can have good months. You can have good years. And 50% makes you about 3 mil. So, again, there's no compounding, none of that's happening. In this scenario here, you are making infinitely more money, infinitely, with A. Roberto says, I thought the ability of making 200% could translate to any account amount. No, not in this example. And the reason for that is because when you're on a lower time frame and you're trading shittier stocks, illiquid markets, but you have the ability to get bigger moves, this is possible. As you scale your account, it becomes harder to do these kind of numbers, of course. But then the question behind it is more so, would you rather be able to consistently continue making 200% on 600K? Or would you be okay with making literally a quarter or an eighth of that on a 6 mil? And a lot of you should be able to notice and understand that over time, you'd want to shift towards this. And again, all of a sudden, you start realizing that bigger wins or more wins does not mean more money. And this is kind of the idea of that. This is what I dreamt about, yes. Yes, that's correct, Christian. Because like the reality is you can't just easily do 100% on a $1 billion account. If you have a $1 billion account, you can't just do 100% on it easily, right? It has to be a very particular market, very liquid market. But again, back to this, would you rather make 1% on $1 billion or would you rather make 100% on 600K? Right? So you start to understand over time that this idea of like making a certain amount every year, percentage points, only matters when you're very, very much starting out. Yes, if you start out with a 10K account, a 20K account, a 100K account, sure. I understand you looking at some more illiquid things, some bigger moving things, getting into a lot of these trades, and looking for that 100 to 200% return, 300%, 400% in a year. And it becomes a lot more possible because, of course, you open yourself up to a lot more asset classes and a lot more ability to trade things that are like illiquid, basically, right? But over time, you start to realize that you'd rather make a smaller return on your money because it actually makes you more relatively, because it's becomes harder and harder to replicate this kind of return the bigger your account is, right? It's possible, right? It's possible, don't get me wrong, but it becomes a lot harder because the realm of the things that you can trade condenses, right? Yeah, I should have made the question a little bit better to help you guys out, but I was trying to say that you're doing this specifically on an account size, not 200% or 20 to 50%. I specifically wanted to make sure you understand there's an account size tied to it, which is why I asked the question this way. Because if you can consistently make 200% on 600K, that means that you're going to consistently make your 1.2 mil. If you can consistently make 20 to 50% on a 6 mil, that means you're going to consistently make 1.2 to 3 mil, right? Which of course beats this out of the water any day. So that was the question and why it was based like that. Because again, if you made this account into 9 mil, right, it might still be 20 to 50, but it also could be like 10 to 40%. Because again, you might close off the amount of opportunity that you actually have, right? Christian says, can't you still get higher RR on higher time frame though, and stop loss size can still be higher since market is fractal? Just transition your higher RR system to higher time frame. Less opportunities, dude. Less opportunities. If I can take 12 trades a week on a 5-minute setup, which I can do. I do this a lot of the time when the markets are good, because I trade some of these lower time frames when they're setting up. That means that if I hit 2 of them or like 3 of them, the rest are all break evens, let's say, and they end up being really good winners, I'm going to be up, let's say, 5% or 4% on my account. In that same week, I could take 0 on a higher time frame, and the next week 0, and the next week 0, and then on a higher time frame I might get 1 trade. That might be a break even, then another break even, then a loss. And then you get a win that goes 6 RR. So you've made 5 RR, right, over the last few weeks. Whereas on this, over the last few weeks, I've taken 10 trades a week, 6 trades a week, times 4 weeks, 20 something trades, 28 trades. Okay, please don't blame me on my math, guys. Okay, my math, or whatever. 28 trades, right? 8 of them are winners, right? You might be up like what? 30%. So no, this will, again, back to the disadvantages or advantages of higher to lower, exactly what was taught in the portal as one of the main things before we even got into all the other technicals. The lower you go, the much more money can be made quicker. Of course. Of course. You have infinitely more opportunity, right? Like, I don't get an opportunity like this. Where is it? I think you guys remember. I made 17%, 16% on a relative account size on these trades this was 1 day, 5 hours. I'm not making 17%, 16% on any 65-minute trade in a day, let alone in like a week. It's not happening, right? Unless it's the occasional Bitcoin trade, right? Where it went crazy. The occasional Bitcoin trade that just went on like for an insane amount. Khalid says, what if you have things to do like school? What do you think, dude? What do you think? What do I advise? I advise you find a way to make it work for you. You play around with the things that can make sense to you. You get good at doing what you want to do over the next years until you can be in college, or until you have more time to yourself, or until you can take a gap year, or until you can literally, you have a 100-year life, right? Likely, who knows, 80 years, whatever it might be. Take 2 years to get good while you're in school. You don't need to be trading. This idea of like, well, I have a responsibility. I can't be a trader. Okay, don't be a trader then. You have work around, literally work around the shit that you have to do. Work around your responsibility. No one's gonna do that for you. I'm not gonna call your school and say, listen, guys, the market's open. On average, the time that he needs to be on there is like 9. If he's trading his, listen, principal, he's trading an EVC that's lower time frame, okay? He's trading a lower time frame EVC. He needs to be on from 9:30 a.m. till around 4 p.m. Okay, EST. Can you please fix your school hours so he can do that? Thank you very, like, listen, no one's gonna fucking do anything for you, dude. No one. Like, you need to figure it out for yourself. Yes, this is your life. I don't know is the answer to you. I did what I could for the 7 to 12 hours that I had free out of school hours. That's it. Like, it's easy, man. I usually hate those questions because, like, what if you have school? What do you advise? Okay, I advise you figure it out. Do you advise I just trade a higher EVC? If it makes more sense for you, sure. Of course. Of course. A lot of traders that have made a lot of money in the markets over the span of 8 to 10 years and did millions did it through weekly charts, daily and weeklies. Because because it just worked for them. There are many millionaires made through trading lower time frames. I know 7-figure, 8-figure traders that have traded only lower time frames their entire lives. I know that if my schedule got a little bit different or got a little bit better where I could sit more in front of the computer, which is I'm kind of doing that too, that I want to be there for these 5-minute trades because if they're liquid and the market's good and I can just take the trade and I can get in on a quick momentum move like this one right here, right? Like a quick momentum move where like maybe I'll trade, this one's bad. It's hard. You can't really see one here. But like I'm happy with trades like this. Right? I mean, this one's also a little bit hard, but something along these lines where you enter through the MB here, right? You enter the MB, throw your stop in, whatever. Like on a 5-minute though, you enter, you move to break even on this candle, and then you take a partial into strength and you let the rest go. This is like a 2.5 hour gain. Like I want to trade more of these on a lower time frames as well. I want to get into those momentums and just get out and I'm done, right? But again, to do that, I know I need to be in front of the computer because I know these things are going to happen throughout the day at random points of time, and that's it. Do you still use a split screen function of TradingView like last week to show the entry and validation time frame? Yeah, you can. Nothing wrong with that. Yeah, of course. I mean, I like the clarity of one chart, right? But I'll throw on two sometimes, of course. If I'm like testing something or back testing or looking at similarity or like what was happening on price when my entry happened, of course I'll do that. Yeah, for sure. Let me go back up here a little bit. So yeah, this is just, I really wanted to bring this up this week because, I saw this happen and, it was a little bit crazy because, like this is an exceptional system. This is unbelievably profitable. This is so good. And yet the member is doubting himself and doubting the system because he saw this 0, 0, 0, -1, -1, 0, 0, -1, 0. And then a nice gainer, but then 0, 0, 0, 0, 0. And he's thinking, no, this can't be what trading is. It's like, dude, you got a very poor understanding of what it actually takes to make it. Break evens are what we live and breathe. Losses are what we live and breathe. It's like the only thing that gets us to the next win, literally, right? And not like gambling fallacy where like, fuck, another loss, I hope I get a win. Fuck, another loss, I hope I get a win. Oh my God, please. It's more so, I know these losses need to happen because I know the edge plays out over time when the wins come. It's very different, right? Because when you gamble, you don't really have an edge in like in slots or whatever. Sadly gonna run off. I'll see you Dan. Every time frame is the same. That's the idea of fractals. Yes, sir. Anton, question. I found myself a bit lost when to expect a longer stage 1 on the entry time frame. Despite I understand higher time frame structure, looking at it, I still have a lot of -1s and Bs in those areas. Maybe entering too early. Any advice to anticipate longer term stage 1? So I mean, some of the answer to these questions is very simple. If it's truly the case that you're always taking a lot of -1s because, as you said yourself, you're entering too early, the next time you want to quote unquote enter, which you should be backtesting anyway, is you should go, nope, I won't enter here, I'll wait again. Wait. Nope, I won't enter here, I'll wait again. Wait. Okay, well, I haven't entered twice, and now this has actually played out into a longer stage 1. I guess I'll start taking entries now. Right? So if it's really the case that you're entering too early, as you're saying yourself, well, don't enter on the initial trades that you think you want to enter. Because it's going to teach you to sit there and be, okay, I need to let this stage 1 play out. So that's your advice, right? You can take advice from the literal issue you're having. Right? I've seen other issues, like I love doing this with people that bring me this issue because, you know, it very quickly makes them focus on the stuff that actually ends up mattering. Well, they'll be like, you don't get it, Anton. You don't get it. Every time I enter, it always goes like this. Always. Always. And I say, okay. So instead of taking the long, if it's always doing that, go ahead and try this. Take your short, throw your stop up, you know, and look to take it down. And when they start doing that, they start realizing it doesn't work. Because this is not always happening. They're just conflating a moment that happens or tends to happen sometimes, because that's what trading is, with something that always happens, and all of a sudden they're now, you know, they're like, oh wait, when these do work, they work really well, and this doesn't actually fix anything. Right? So like, one thing you can do is if something always happens, well, either do the opposite or wait. Right? Is really the only two answers. So if it's always the case that when you enter an MB, it goes up and then comes down, theoretically, you should wait for it to take out the MB that you would have entered, and then sell the low of the candle, right? And then make money. Because if it was, you know, if it's really the fact that it always happens, then that's all you have to do to fix everything you have and be profitable. But that's usually not the case, right? It's usually not the case. So yeah. Yeah. Men, can you explain the uses of each indicator on your screen? Yes, in the portal, I will. I'm not going to go over every single element now because there's a lot to it, right? But the main thing is really just the moving averages. That's all it's on my screen. And then the model distribution or accumulation down here. Everything else is drawn by me. So really the only tool is the moving average, and the easy version of them is in bullish, price should move to the 1020. In bearish, to the 1020 on the bearish side. That's really it. Man, you are blowing my mind again. Different type of trade type management. Yeah, of course. Of course. You need to identify the kind of trades you're taking and where they are in the move, right? If you can't, then of course you're going to get stuck. Because again, like as I love to say, this trade here is very different from this trade here. Two different trades, right? If you're entering this trade, if I'm entering this trade, right, whatever it might be, boom, I'm in it. Okay, stop under this low or this low, doesn't matter. Whatever you end up doing, right? I'm taking most of my profits on this here, and I'm trying to close the rest in this or as it loses its strength. So while this is a big candle, I'm taking full profit here, or as it starts moving down and this becomes a wick, I'm closing every portion of the position here. Because I'm aware this is usually not a move that keeps going. Like, yes, it keeps going here, whatever. But I don't even know how you're gonna sit through this, right? And usually it won't do that. But that's how I'm managing this whole trade, right? If I'm entering, once again, through, goes, comes down, like through here, right? I'm breaking even on this move at the close of this candle, or as this candle is up here. The next day, I'm taking a partial into this candle. I'm taking a partial maybe into this candle, or I'm throwing my stop under this low and getting closed out there entirely. Or if I somehow survive that, as this candle gets created, I'm either taking a partial or as it becomes a wick, or as it goes black, as it becomes bearish, I'm closing everything here. That's it. Those would be momentum-based, MB-based entries within overall bullishness, right? And those come from the later stage of a delivery. So what you'll get is you'll get your normal move higher as a stage 2, your big stage 1 that meets the rules of a flush out or reaccumulation. MBs will build from it, MBs will build from it, MBs will build from it. Those will start, then it will start making those type of moves. 1, 2, sometimes more, but usually 1, 2 to 3, maybe 4 sometimes, but 3, right? 1, 2, yeah, 3, and then it fails down, right? Those are your follow-up MB entries through the momentum, right? Accumulation happens. This is that stage 2 accumulation delivering. All that's happening here is you're capturing, right? So if you think about it, look at this. All you're doing is you're capturing a future moment of the stage 2, and that's why you have to be much quicker, because you're capturing the end of the stage 2. And if we go back to my FICO trade, right, think about what's happening here, right? The initial trade has the opportunity, and then you're in stage 2. Now, if you notice when I'm entering this, I'm capturing the very, very end, the potential end of whatever this stage 2 is. So does that mean I should be holding on and letting it do its thing so I can go into a stage 1 like this and become a condensed stage 1 and whatever it does and then boom, right? Or should I be properly managing and partialing into this? Which is why you can see on this trade, 1, I've partial fully taking and I have my stop loss right here. Right? I'm looking to get out of this thing already. If it goes higher, I'll take off another partial here, and if it becomes a wick and even comes back down, I'll close the entire position here. That's it. The same rules as you just saw on the Bitcoin little trade or whatever, it'll be applied here. I'll get myself out through the strength or through the weakness after strength, because I don't want to be in it anymore. So far, it's only shown strength. It hasn't failed yet, right? So that's why I've been in this thing. But like, I could have easily been out of this entire thing by like this point, by this point here, and been really happy with the trade, because I'm aware these are meant to be faster paced entries. But that's okay with me because I also understand the management associated with them is very, very different. And I can put a lot of my capital behind the trade, right? And make an extra 1, 2, 5, 10% on my account like this. This actually comes from, I don't know if you guys remember, I was showing you guys quicker-based ICIs or quicker-based entries, like very quick ones, a while back, like literally months ago, right? Like 7 months, 6 months ago. I'll show you guys faster-based entries where you go break even very quick and you look to take out some of the strength. That's where this comes from. That's where this type of entry comes from. Again, nothing new, nothing crazy, but consistently tested, consistently viewed, consistently seen, and then executed upon once it's time. Live on the type B. Holy. That's really good, dude. That's insane. And that's your average profit per trade. Yeah, this is like insanely good. Insanely good. Wow. Wow, wow, wow. Good stuff, man. Very good stuff. Because it's less likely of it mitigating in drawdown than going into profit higher based on the area of entry compared. Yes, Christian. Nice, says Shellings. This is what you mean by break-evens make you a lot of money. Oh yeah, for sure. I mean, like I do this here and there just to showcase it. But I talk about it over and over and over again. Again, this does not include all my data, of course. But it's unbelievable, right? How much break evens, at least in the current, of this current year, of how much I've been able to break even, have made me in just this alone, right? This is like insanity what this has done. And again, like there's nothing really too crazy about these statistics, right? If you consider my break evens as losses, just if you add them, right? I have like a 30%, 40% hit rate or something, right? Or something around there. Yeah, 40%. And honestly, this could be lower too. Honestly, it could be way lower, and this could be higher. But it just so happened that it's been it's been moving in this way so far. But the only reason that I'm making so much money is because, again, the break evens are saving me money. And then my next win is, you know, because of how it works with equity size, is compounded into making more money, right? Of course. So, yeah, and for that guy that was like really upset about his losses and break evens, I mean, like, look at this. 0, 0, 0, 0, 0, 0, -1, wins. 0, -1, 0, tiny win. 0, 0, -1, win. -1, win. -1, 0, 0, 0, -1, small win, and then some nice wins. 0, 0, 0. I mean, like, it's funny because when I put up a backtesting video or like a hashtag the process video, whatever it might be, a lot of the time it feels like, if you guys have watched any of my backtesting, right, it feels like as you're watching it, all I'm doing is taking zeros and -1s and not doing anything. 0, 0, 0, -1, -1, and then after I add it all up and you're like, how the fuck is it plus 14 RR? Where did that come from? And that's because we attribute and we focus a lot on the thing that tends to happen. And that's fine, right? The thing that tends to happen is you will be taking break evens and losses and nothing else. And then we forget to focus on what that's adding up to. That is why, like, if you've ever conducted your own proper backtesting session, it will literally feel to you like all you're doing is not taking advantage of opportunities, taking losses and break evens. You're gonna sit there going, what the, like, I'm just break even, break even, break even, what the heck? And then you go back over after, 50 trades, 20 trades, and you're like, I'm up, 6 RR. I'm up 10 RR. Where did that come from? Right? Where did that just come from? I don't understand. And it's because, you don't think much about the winners because they happen over a little bit more time, and you focus a lot more on the losses and break evens because they're happening consistently. As they should. Right? As they should. They should be happening consistently. It's good. Yeah. Yeah. I kind of use the same thing for the areas in which my FWMB's entry is based on if I want to hold to higher partials or just collapse after WMB against me. Yeah. Shelling says, hold up. What happened, bro? What happened? I'd kill for that. Oh, yeah, like his results. Yeah, exactly. Like some people here would literally, their lives would be made by these results. But again, it's because as he's going through, one, the Instagrams and the YouTubes of the world, and two, experiencing these live, it feels like most of what he's doing is leading to break even or losses and nothing else. He was not kidding, by the way. He wasn't kidding at all. When you break even, do you take into account commissions, or will that only be a small amount? How do commissions affect stuff like that? The higher you go, watch the portal material, please. Okay. The higher you go, the less slippage and commissions matter. The lower you go, the more they start to matter. The more liquid the asset you trade, even being lower, the less you'll pay in slippage and commission if you're trading something like stocks. Of course. But yes, you pay more in commission and slippage the lower you go. Because you increase the sizes you have to trade. And increasing the sizes you trade means you get worser fills, and you pay more per contract traded, or per share traded, or per whatever traded. Javian says that was me. I understand how delusional I was thinking now. I just never had an outcome like that, so it was a new perspective of things. There you go. I'd rather have 100 break evens rather than extra 100 losses any day of the week. Yes, exactly. Because 600K will eventually be 6 mil. Yeah, no, I wasn't asking the question like that. I remember that. Yeah. Yeah, kind of a trick question, guys. Sorry for doing that to you guys, all right? Would you end up spending less time on charts in scenario A? Not necessarily, no. I wasn't talking about that specifically, so no. If you're using prop firms, would trading remain the same as scaling increases? What do you mean, June? It's all the same thing, man. Depending on the firms you go with as well. Consistently 2 to 3 hour a month on a 400K or whatever account, it can already get you from full-time to part-time working. It's crazy. You mean from part-time to full-time of trading? Oh, from full-time work to part-time. Gotcha. Okay, yeah. And again, that's going to matter. That's going to depend on the person you are, right? So for some people, 2 to 3 hour a month on a 400K is more than they already do ever. So they would just transition to full-time trading, right? Yeah, drop out. Low key, it's all fine in the end though, because 5% on 2 to 5 mil will outweigh 30% on 600K. Yeah. But again, you stand to make more. So on this, right? If you have a few $1 million in your account, you can't trade 1% risk on this, really, right? I don't think. What was the... Maybe you can. I don't remember. But you just can't, right? You just can't take the risk that you might want. It's going to be impossible. So this doesn't even become an apparent move for you to even consider, because it just doesn't matter. It doesn't matter enough. How was it like when you were working full time? Are you talking about me personally? It was, I had to find the time that I could be on, that I could trade, that I could watch the markets. And also I would watch the markets on days where I didn't work, right? Instead of working every single day, well, I had multiple jobs, but at a certain point I had, I was a bar back, and I did around 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, around 13-hour shifts, and I did them for about 2 to 3 days in a row, and then I did trading the rest 4 days. So I did Saturday, Sunday, and Friday of 13-hour shifts. So I did over 40 hours, something like that, in those days, and then the rest I would spend trading or doing other responsibilities that I had. I made it work for myself. Now, again, you don't have to be me. You don't have to do it that way. But I did things that made wanting to be a trader and working around trading hours work for me. And that's exactly what some of you may have to do. Some of you might not want to do, and whatever it might be. But again, you have to manage your time. Figure it out. I mean, there's nothing else to that, right? No one's going to do that for you. No one's going to come from the sky and just, here's the time you need. Good luck. It doesn't work. Do you still use these webinars are the funniest yet the sauciest thing? Could you have a look at your CAD? 3 days exiting a stage 1, and the 2 hour is flushing out / deep mitigation. However, the higher time frames are bearish and choppy. Would you ignore because of this? Well, let's go look at it. First of all, where's my thing? Euro CAD. All right. I don't think it's choppy or anything on the weekly. It looks fine. Yeah, that looks fine. This looks fine too, to be honest. 60. There you go. Yeah, it looks like a fine market. I mean, there's nothing here right now, but yeah, if it can start going up, why not? Perfectly fine. Don't see anything wrong with it at all. Yeah. It's down here now, but yeah, let it come up. The losses are the bridge between you and your biggest wins. Yep. Hey Anton, I've watched the archive course webinars up to 86 a few months ago when I was in the course. I've joined again and went through the members portal. What should I do next? I already went over that. Please don't copy paste questions unless I actually missed them. Anton, when will you see you on a podcast? I like a certain channel he has interviewed. I'm not going on any podcasts. I don't like a lot of the people some of the podcasts are associated with. I'm not going to say names or names of firms or names of things that have rug pulled, but I am very much not interested in associating the brand with other brands in the space. Because oftentimes through podcasts, you associate yourself instantly with other people that have been on them. And a lot of the time, a lot of the stuff that those people teach, say, act out, pull, are not worth having any association with, even though it might be good for the company. Yeah. What do you use the volume for? Not much. You can study setups with volume on there if you want and see if you see anything special. But really, it's just lower time from stocks that it matters a little bit on. John says, with respect to my question earlier about the chop on the context time frame, the image I sent was 1 day on EuroJPY starting April 2004. Would the sideways action on the context time frame phase you if the validation time frame is clean? No. It would not. Nice. Very nice. I'm more excited with Ment's loss rate. It's very low. It is very low. It is extremely low. It's honestly too low. It's suspiciously low is what I would say. So I'll focus on getting this loss rate up in the next few weeks, okay? See if we can get that up a little bit. Commission for close, commission for enter. Yep. Hey man, can you look at latest trades? I cannot. Gotta go, wish you all a beautiful Sunday. Yeah, we're gonna get off in a sec here. I'll see you again, Emily. Thanks for being here, man. 13 hours, yuck. Yep. Well, you want something, you find a way to make it work. Technically, right? That's all it is. Regarding commissions, 1 minute entry, this is how -1 on gold looks. The entry was risking 1K, yeah, but you took like 1.5K, exactly. So it's minus 1.5 R. Yep, exactly. I think this got buried in the chat. Question on FMBs. They have to be made of 2 or more candles, correct? Kinda, yeah, but not necessarily, but yes. It's because again, they're fractals, right? So like if you use 1 candle and if it didn't have a low here, it's still fine. Because you understand what you're looking at there and you can view this as like the double FMB or FMB, FMB, FMB. So yes and no. Use 1 or 2, call it an FMB, it's perfectly fine. 2 or more is fine as well though. I can't make an FMB with say 4 candles. I mean, then it just becomes an MB. The idea of an FMB is that it's just much smaller. That's it. Breakdown UC and gold on 5-minute entry next week. 5-minute entry? I mean, listen, it has to actually be setting up then for 5-minute entries. Like, yeah, there's nothing right now. That's for sure. Yep, nothing at all. Nothing on UCAD. Again, like, maybe, but they're just not setting up at all right now, right? This looks better, for sure. Yeah, this can make setup. I don't know where UCAD came from, but this looks good. Man, if I started a podcast, would you come on? Brother, I just told you my problem with podcasts. Probably not. If I start a podcast, I'll come on, okay? To my own podcast. The problem with podcasts has always been the same, okay? A lot of the time, your content is having people talk. And the problem is if you've had great people already talk, or you can't find someone to talk, then you don't have content, which leads to getting people to talk that aren't really or should not be really talking. And all of a sudden, you begin to tarnish the people that have spoken before by the people you have speaking now. And the people that have spoken have no control over the people that you have speak now. So all of a sudden, you get a cataclysm of dog shit. And I just don't want to associate myself with a lot of that. It's not why I started what I did, you know? Yeah. 30 minute, 300 minute. It looks good. Yeah, gold lower time frame longs look really good. I don't see anything wrong with that. For sure. For sure. Interesting. So you're really focused on the fractal stage 1s and 2s across timeframes rather than the overall model-based stage 1. Yeah. I guess I need to focus more on recognizing clean momentum and structure on validation timeframe. Yep. Hey, Ment, is it possible you could take a look at gold using 1/6 1 hour? Yeah, I mean, there's nothing on the 6 yet, but if it can go sideways, sure. It's just coming out of a mini accumulation. Yeah, I mean, you had like a mini momentum entry here if you took it. You had a mini stage 1, 2, 1 flush out plus like whatever this was here on Friday. Was this Friday? I don't know when this was. Friday? Yeah, this was Friday. Yeah, I mean, you came out of this, started making a little move, and it's continued since then. So that's really it. And then, yeah, if it can continue flushing out and making deliveries higher, then it should be good. You start a podcast and have members come on? Yeah, could do that too. That could be fun. Soybean for shorts. Oh yeah, this thing's been beautiful. For sure. It's been really nice. Inverting it right now. Yeah. Near end of week, it also followed through with nice lower time frames. Is that like 5 or 10 minute or something? Yeah, looks good. If you're in this, good. EU quick look. Yeah, still shit. From when I told you it'd be shit back where here. Still remember this. Around here I said we're entering chop and nonsense. And since then we've been in chop and nonsense. So that's really nice. Hopefully a lot of people have been able to make a lot of money during this whole nonsense that's happened. I wonder who's actually done well on this thing. I mean, recently it started to pucker up a little bit, for sure. It's been a little bit cleaner recently. Yeah, I mean, it's starting to move into accumulation, which is good to see. I mean, it just took a while. Starting to move into some decent accumulation, though, from there. Yeah. You could definitely start to move out of here. We could finally start to see some bullishness on this thing. Yeah, not bad. Not bad at all. What's the screener saying? Yeah, we're still a little bit all over the place. I remember I used to trade the toilet bowl, now it's a flush out. There you go, bro. That's the flush. Yeah, I mean this is starting to look pretty good. Jur 40 is okay for lower time from trade. Yeah, all the indices are good for shorts. All of these are on the short side. They're just getting ready to go lower or sideways, and then, you know, but right now just everything's getting ready to go lower. So you trade 1 minute, 5 minutes, 60 based on your reply to my Euro JPY image. The higher time chop on Euro USD doesn't matter as much for lower time from entries. Say you trade 1,560. There's nothing here right now, is what I see. In general, though. In general, what? Yeah, EVC is 1,560, sure. Then I don't know what you meant by that, to be honest. Thoughts on JPY USD on 6 minute entry. JPY USD? Why, is it because it's bullish or what? I'll see you, Toby. Thanks for being here, man. Yeah, this looks good. For longs. So USD JPY shorts. Yeah, I guess it does look good right now. It does look good. Yeah, I like this. It looks really nice. And reaccumulation as well. Yeah, that's a good one. That's a good one. Yeah, good spot. I like it. Just like a little stage one here. Yeah, UJ shorts, JPY USD longs. It's nice. It is nice. Making this nice move out of there too. So like the model chop on 1 day / 4 hour Euro USD doesn't bother you if you're trading 1 minute entries with a 1 hour context time frame. John, same answer as the week before and the week before that one in regards to EVC and systems, where based on the EVCs that you're focusing on, you can increase them or decrease them, right? I hope you remember the discussion. I think I literally remember you asking like pretty much the same thing, just in a different way. Does it bother me specifically if I'm trading a 1 minute? I guess not, because then I'm using up to 60. So no, it's fine. Even then though, the 4 hour is not in chop. 4 hours good. 4 hour looks quite okay. So I don't quite understand. The model chop on daily 4 hour doesn't bother you. Well, this is the one time we started to come out of that chop. This was where the chop existed. Now we're coming out of that chop. We're starting to make clean moves higher. We're starting to surf higher. I'm just confused how overall model chop, even on your context time frame, doesn't bother you. The model chop was here. We've started to put in bullish action. We're moving higher. That's 1 day though. Okay. Well, I don't really see anything here anyway. It's not It's not above. It's kind of just moving down. So if you're bearish, I guess you can start watching this, but there's nothing here to watch anyway. Right? I don't see anything to watch. So who cares what anything's doing if there's nothing for me to watch here? Sorry, I'm getting a little confused right now. I don't understand the question, to be honest. I'll go over some other questions for now. The sewer setup, trading shitcoins. Say trade. Oh, we went with that one. Thoughts on JPY USD? Yeah, I like those for longs. Makes sense. You think the QQQ will ignore the 50 EMA on the weekly then? I don't know. I'm not looking at the weekly that much there. It can do whatever it wants to. It might start getting bought up, but right now, you know, validation time frame, right? It might build a little MB here over some time and then start moving higher, but right now, none of that's happening. I just have to wait if I want to get bullish on this thing. Right now, it's proving to be relatively bearish. Right now, it's saying it wants to kind of move sideways or just keep going lower. I don't really care about the 50 EMA on the weekly. The weekly's below the 10-20. It's moving down. It wants to go down. It's probably going to catch the 10 or the 20 here and then roll over. Hopefully we get, you know, a multi-month move down to like 390 or something. Because then the market that's going to come from that is going to be phenomenal. I'm assuming. I'm confused too. In the image I sent, price was just chopping back and forth model-wise and price-wise, but that doesn't concern you. Nope, because you said it was the context time frame. For the context time frame, I'm mainly looking for price to be moving over the 10 and 20 or below the 10 and 20. It's just a general position of where we are in the market. I'm wondering what place models should have in my system. I told you I don't use models mostly on the context time frame that much. Context clues is very focused on model to recognize chop, and now it's less of a focus, not sure how to navigate. You can use it on the validation. Right? Shinyear energy. Entry on the daily. If you enter on the daily, you're looking at a weekly as your thing. I mean, maybe. Which means you're looking at like a 10-week as context. Yeah, this looks good. Daily entry, I don't really see it. I mean, like, I guess you traded this one as an MB or something, which is okay, but not really my type. I don't see the daily entry. Had a nice little one into this two, then it's having this one. It probably is going to go on for a one a little bit longer, and then give you an actual daily setup somewhere around here. And then into the momentum, you can then find like some quicker base trades, right? Yeah, like even here, John, like I'm not going to open the 10-week and say, okay, what, you know, like, where's the model chop? Like maybe if price was here, it would be harder to ascertain what I want to trade or which direction I want to trade in, right? Because you have a market that started, let's say, overall accumulation, went into reaccumulation. Under the MAs here, it's potentially bearish, but lower times I'm not going to confirm that. And right now, like if I saw this, I'd be like, this is kind of choppy. I'm not really interested in that. But then around here, as we get back above everything, within potential reaccumulation, this could be somewhere to watch for a lower time frame. Wow, that had a wild move. So the model is secondary to the actual price and where we are relative to the MAs. For context, yeah, of course. Yep. I want to enter on a higher time frame due to the mastery course and personal life. Thinking about a entry time from somewhere between 10 to 30 minutes. It used to be on the 1 minute. Due to the mastery course. I mean, the mastery has focused on a lot of time frames. You know, I looked at some examples of my own trades from the 65 minutes, of course, because they're just personal examples. But don't forget, like, I'm on every day. Right now is not the kind of market for it, which is why you don't see it a lot. Because this market is definitely not in a bullish state. Because I like to trade the bullish sides on lower time frames because they provide the biggest kind of moves. But I'm trading a 5 minute when the market's in a permissible context for it, right? Like, I want to trade this stuff. I really want to trade this stuff, but it's not the kind of market for it. So you're not getting like these really nice moves at the moment, at least, right? Because a lot of it is just bearish. A lot of money's coming out of it. There's just kind of buyouts happening right now. I'm not seeing stuff where it's just like, it just wants to get bought up crazy and just go, go, go. But you'll probably see more examples in the portal of these kind of moves if there's more of them, right? Because I'm kind of doing it based on the stuff that I'm trading right now. But yeah, that's perfectly fine too. Any tips or recommendations for finding my perfect time frame? Yeah, test. And then forward test, because forward testing is going to give you the actual live feel of trading it. Melly needs a flush out. Okay. Sure. I mean, if it needs a flush out, it needs a flush out, right? Three-day, 2 hour. I mean, yeah, this thing had a beautiful setup with whatever was happening here, right? It's like little stage one. It was very choppy. It was hard to get this one. I could see that. I see why it's hard. But then you had your mini follow-ups, right? Up throughout all this stuff. Like, these were the later type trades. Hard to catch though. Like, these look like they'd all be break-evens anyway, so. Nice move higher. Yeah, these were harder. Because these were just gapping on earnings and stuff, so you had red news. Yeah, I mean, there's nothing to do there. You can just probably wait for a flush out. 5 second, 30 second, 5 minute helped me trade and work full time while trade on my days off. There you go. Good. Very good. All right, guys. I'm getting a little tired here. Seeing a lot of people shuffle out anyway, so going to wrap this up right now. There we go. Thank you, guys. Thank you all. Anton, how are you? I think, didn't you just ask me that, bro? I'm good. You the shit. Thank you, guys. Thank you very much. Double checking. All right. Pleasure. All right, guys. Listen, thank you all. Thank you so much for being here. I love you too, 1W. Very good.